Welcome back to the Wall Street Podcast. Today, we're diving into the China New Energy Vehicle Weekly Chart Book 2025, Week 29. This one comes from Goldman Sachs, China Securities Company Limited, released July 23rd, 2025, bright and early at 7:04 a.m. CST, authored by Tina Hao and Sylvia Hu. It's really a key pulse check.
Exactly. And this report breaks down the China NEV market into 7 key areas. We're looking at weekly insurance numbers, NEV penetration, brand volumes and shares, upcoming events, orders, also MSRP tracking, dealer discounts for NEVs and ICE cars, and critically upstream battery pricing.
Right, so our goal here is to cut through the noise and pull out what matters for you, the investor. Let's start with the headline numbers for week 29, that's July 14th to 20th. Passenger vehicle insurance registrations hit 388,000 units. That's up 7% week over week.
And NEVs specifically, they reached 214,000 units, which is a 5% increase week over week.
Okay, growth there, but what about penetration?
That's where it gets interesting. NEV penetration actually dipped slightly. It went from 56.4% the previous week down to 55.2%. So it's a small step back there.
And on the brand side, any major movers?
Definitely saw some strong growth from emerging names. Onvo was up 44%. Firefly up 40%, and Luxeed gained 17% week over week.
Wow, those are significant jumps. But in terms of total volume share?
BYD is still firmly in the lead, holding 24% of the market. Then you have Tesla China at 5% and AITO right behind them at 4%.
And the shifts. Who gained and who lost share?
XPeng, AITO, and Onvo saw the biggest gains. XPeng's was about 0.3 percentage points, tied pretty directly to their G7 deliveries ramping up.
Okay, product cycle really driving that.
Exactly. On the flip side, Tesla China, Leapmotor, and Li Auto saw the largest, though still relatively small, declines in market share for the week.
Got it. Let's broaden out to market dynamics. The trade-in subsidy program.
Still looking strong. The Ministry of Commerce reported 4.1 million applications by the end of May, and the daily application rate picked up significantly in the latter half of May, from around 32,000 a day to 45,000.
That suggests continued strong policy support boosting demand.
Definitely. Now, looking at pricing, MSRPs were pretty quiet. Just one official cut last week. Dongfeng Nissan trimmed RMB 3,000 off its Venucia VX6 facelift.
How does that compare year to date?
Year to date, we've seen 60 official price cuts, averaging about 8%. That's actually fewer cuts than the same time last year. In 2024, by this point, there were 76 cuts, also averaging 8%. So maybe a slight easing on official MSRP cuts.
Interesting. What about actual dealer discounts, the retail end?
Okay, so NEV dealer discounts averaged 8.02% as of July 21st. That's actually narrowed a bit from 8.24% the week before.
In ICE vehicles.
The discounts also narrowed slightly, but they're still much higher, sitting at 21.32%.
So the gap is closing, but ICE discounts remain substantial.
Precisely. And finally, upstream batteries. Lithium carbonate prices.
They saw a jump, right?
Yes, of 4.7% week over week, hitting RMB 67,500 per ton.
But the cell prices themselves.
That's the key point. LFP and NCM prismatic cell prices were flat week over week, stable despite the lithium carbonate increase.
Okay, lots of moving parts. Let's try to unpack some of this. First question. These market share shifts we saw, what do they really tell us about the competitive landscape right now?
Well, I think it screams dynamism, driven heavily by product. XPeng's gain, like we said, linked straight to G7 deliveries. It shows how crucial new, appealing models are in grabbing attention and share in what's, frankly, a crowded market.
Right. And the slight slip from Tesla and Li Auto.
Even though they're marginal losses, it really highlights the pressure from these newer, aggressive players like Onvo and Firefly. Consumers seem ready to jump on new offerings. So for investors, the takeaway is you have to watch that product pipeline and execution very closely.
Makes sense. Second point, that narrowing gap in dealer discounts between NEVs and ICE vehicles, how significant is that?
I think it's potentially quite significant. Seeing NEV discounts at around 8%, while ICE here over 21%.
Yeah.
The fact that the NEV discount narrowed slightly could signal a couple of things. Maybe NEV makers are finding it a bit more pricing power, or perhaps the really intense phase of the price war is stabilizing, at least relative to ICE cars.
And the implication for manufacturers.
It could mean better margin potential for NEV companies, which is obviously a critical metric investors are watching, something to keep an eye on.
Absolutely. Okay, final question. Put together the strong trade-in program momentum and the stable battery cell prices. What are the near-term implications for the sector?
You've got 2 strong tailwinds there. The trade-in numbers show government support is still effectively driving demand. That's a positive. And while lithium carbonate ticked up, the stability in actual cell prices gives manufacturers some much-needed cost predictability, at least for now.
So a supportive environment.
Yes. Combined, It suggests a supportive backdrop for NEV production and sales volumes in the near term. It points towards a generally favorable operating environment for the sector.
So to wrap up this week's deep dive,
It really paints a picture of a fiercely competitive China NEV market. You've got intense brand battles, shifting price dynamics, but it's all happening against a backdrop of sustained policy support and, importantly, relatively stable core input costs like battery cells.
the data definitely reinforces that new models are king. Success hinges on launching well and capturing that initial buzz. And those subtle shifts in pricing power, the narrowing discounts, definitely warrant close attention moving forward. Something for you to consider is how these competitive and pricing pressures might force manufacturers to further differentiate, maybe through technology, software, or service, beyond just price. What will the next strategic move look like? Thank you for joining us today.